Hey everybody, I want to talk about money, and I'm going to talk about an assumption that I'm making on something that happened to me the other day. I'm in an elevator in a building. There's two delivery men also on the elevator, and they've got like a big appliance with them. And I size them up immediately. Both of them wearing brand new or new-ish looking and very expensive Nikes. One of the guys was wearing Bose headphones. The other was wearing Apple headphones, like the brand new big ones. I'm not talking about the AirPods. I'm talking about the big over-the-head ones. I think they're like $300 or $400 or $500. They're both standing there with their headphones, their fancy shoes, and they're talking. They're having a conversation. And one of the delivery men says, they're talking sports. So whenever I hear sports, I just immediately start tuning out because I'm not a sports guy. I don't care about sports. But the one guy's angry, with the Apple headphones. He's very angry about some sport thing that happened where the guy didn't do what he was supposed to do in the game and lost. And the other guy was like, it happens. And then the guy who was pissed about the sports with the Apple headphones was like, well, yeah, the only thing is I lost a lot of money because I was on Draftkings and I put all this money on Draftkings on that team. And if it wasn't for that guy screwing up, I would have won a lot of money and blah, blah, blah. He's going on and on. Well, all of a sudden I hear Draftkings and my ears perk up because I'm a shareholder in Draftkings. And this year alone, Draftkings stock is up 229%. So all of a sudden I perk up and I turn to the guy and I go, oh, I don't use Draftkings. So I don't have any experience with the app. I don't know about it. Actually interacting. I know about the app, but I've never used it. So I perk up and I go, oh, you have Draftkings? Do you like it? And he's like, oh yeah, dude, I love Draftkings. Draftkings. He's going on and on about how great Draftkings is. And, and how much money he would have made in the game if the guy had done the thing, and he loves Draftkings. He's always on Draftkings. And the elevator, my floor gets, I say, all right, as I'm walking off the elevator, I turn back and I look at the guy and I go, hey, by the way, do you own any Draftkings stock? And he looks at me like he's confused. And I say, well, I only asked because I'm a shareholder too. I'm investing in Draftkings, and the stock is up. I didn't know 229%. I looked it up right before I filmed this video. But I was like, it's up quite a lot this year. And he was like, oh no, I don't mess with the stock market. Too risky. And I walked off the elevator kind of like, that's the difference between the consumer mindset and the investor mindset, what I'm always talking about. So I was curious, again, whip out my phone, and I type in average appliance delivery salesperson, average appliance delivery salary in my area where I live, Washington, D.C., and it's around $31 an hour. And, the average is this to that, but he makes, I'm assuming, under $50,000 a year or close to $50,000 a year. Maybe he makes a little bit more because he had the vest or a pin or whatever from the company they worked with, and it's a luxury appliance company. So I was like, this guy's making like 50 grand. And it's interesting to me because TikTok, I talk about this a lot, but TikTok is a little bit of a bubble. And a prime example, just one example that I'll give is when you hear people on social media saying, cancel this company or boycott this company or protest this company or we're no longer supporting this company. And you walk around town, if you're in a big city like I am, and everyone's at that company. It's Starbucks, it's McDonald's, it's Walmart, it's Target, whatever the company is. People on TikTok, it's a bubble, and it's sort of like an echo chamber of like, yeah, we're all doing this, yeah. But outside of TikTok, I walk around, my Starbucks up the street is packed, McDonald's always busy, people are smoking cigarettes, all these things that people are saying we're no longer doing, we're stopping. And another thing that I notice in relation to that echo chamber is how people on TikTok always say they have no money. I can't invest, I have nothing. And I understand that, and I know a lot of people really are struggling. A friend of mine made a TikTok video yesterday about, someone in the comments called it like, oh, that's just called retail therapy, but they were using some gimmicky title like, dumb spending or like panic spending or like panic spending soothing or, something stupid like that. Talk about how people are freaking out about the overall world. And so they're shopping. And someone in the comments was like, yeah, that's called retail therapy. And someone else commented and was like, yes, retail therapy or whatever the term was. yeah, like paying my bills and getting groceries. And the creator friend of mine was like, well, that's a necessity. That's not like an excessive purchase. And what this article was talking about was excessive purchases, soothing, like self-soothing through retail therapy. And people will find a way, man. That's kind of what I wanted to talk about, is that like, I see so many people saying, I have no money left over. I cannot invest. There's not a single dollar left over. And it reminds me also of the people who say, I don't have time. There's no time. Like, oh, do you read? There's no time. Oh, do you do yoga? No time. And this quote that I heard once, and I'm going to butcher it. Maybe I'll put it on the screen if I can find it, was like, we have the time. We've just allocated it to things that we want to spend that time on. So people say, do you read? Oh, no, I don't have the time for that. But you have the time for 2 hours of Netflix every night. That's because that's where they want to spend. They don't want to spend their time reading. They want to spend their time on the couch watching TV. Do you do yoga? Oh, no time for that. No, there's no time for yoga, but you scroll on TikTok for 45 minutes. So you do have the time. You've just allocated it. And that's not to say that I'm like hating on the people. I'm just saying some people, they have the time. They've just allocated to the things that are important to them, which is fine. And I think it's that way too with money for some people. I know some people are stretched so incredibly thin and there really literally isn't any money left over. But the investor versus the consumer, for some people, they'll find a way to spend money on things that are important to them. And for that delivery appliance guy who was talking about Draftkings and he lost all this money and blah, 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 I don't know what that guy was spending on Draftkings. He kept saying a lot of money, all relative. Maybe it was $50, maybe it was 500. I don't know. Maybe he's going into debt to do this. Maybe he really doesn't have the money and he's, racking up credit card debt, gambling, or I don't even know if you can do that on Draftkings. I would assume you probably can. But the point is, you can find the money, you can find the time. For many people, this guy has a salary of average 50 grand, and he's found the money to put, I don't know, a decent amount every month probably onto this sports betting app, hoping to win. Meanwhile, he could have just purchased hundreds of dollars of Draftkings stock every month and been up 220-something% year to date. One last thing I'll add on this whole topic is that yes, Draftkings is a speculative stock. It got impacted very hard during COVID. They're still a relatively new company. There are still issues with the company itself. And if someone's watching this video going like, damn, it's up 229% and I missed it, a lot of new investors say, I'm gonna buy it here, up 229%. Hold on. This is a company, like I said, that's already had quite an impressive rally year to date. It doesn't mean that the stock can't continue to go up higher, but when you see something that's already up 229% in 12 months, the concern, at least for me, is that it's run its course, it's had its good news. It doesn't necessarily mean that it's gonna drop and tank, although it could. It just means that like, hey, let's step back for a second and look at this and go like, wow, it's already up 229%. Realistically, how much more could it go up in the next 12 months? It could go up a lot. Nobody knows. That's the risk with speculative investing. Also, picking a company like that, you could have picked Etsy during COVID and you'd be down quite a bit. You could have picked Peloton and be down quite a bit, which hammers home the fact and the thing that I talk about most frequently on here, which is that foundation. Foundation is the strongest part of the house. It should be the biggest, the safest, the most boring S&P 500 index fund foundation, and then you build upon that. All that is to say is, I'm not saying run out and buy Draftkings, but if there's a company that you like and there's a company that you use, it might be something that you consider investing in. After all, this guy was dumping hundreds of dollars into Draftkings, maybe even thousands, over the course of who knows how long, and it could have been put in the stock instead. Or if it was something he really loved, half of that money, he could have been gambling a little bit less and investing a little bit more. The whole point for you who's watching this is to start being aware of your consumer side and your investor side of your brain and think more like an investor and a little bit less like a consumer. People always love to run to the comments and say, if everyone thought like you, the economy would collapse. Unfortunately, not everyone does think like that. And you know what? I have a feeling that if everyone spent just a little bit less, we'd all be fine. Except for Wall Street and their corporate profits. But they'd readjust too. They'd say, people are spending a little bit less, so we're going to guide down our forecasts and whatever. And long term, everyone would be fine. And you'd be a little bit better off because you'd be wasting a little bit less gambling or buying shoes or buying makeup or buying all these expensive things and not also considering the stock. Ulta, these beauty companies, if you're into beauty, if you're into video games, if you're into tech, all of these stocks, some of them perform quite well, which is the thing that I talk about most frequently. Is that as an early investor, when I started over 20 years ago, I was buying companies that I knew, used, and loved. I didn't know about balance sheets. I didn't know about debt. I didn't know about revenues increasing or price to book or price to earnings. I knew none of that. I knew I love WWE. I'm buying it, and I ended up being up over I think 2,000 or 3,000% long term. But on my more recent investments in WWE, recent like 10 years ago, up over 950%. I bought Apple because I loved Apple products in high school. When I graduated high school, I loved Apple. I wanted Apple stock. In 2012 and a couple years before that, I was a huge fan of Facebook. I loved Facebook. I don't use it anymore, but I loved Facebook. So I bought Facebook stock. It did very well for me. When Tesla came out, I kind of knew about it a little bit, but I was like, something's going on here. And I waited a few years, but eventually I got into Tesla. So the companies that I used to buy before I did all my research were just companies I knew, used, loved, trusted, blah, blah, blah. It's a good starting point for you as a new investor to just look and think. It might not always be the best investor. You might have a Peloton and love Peloton, but their stock sucks. You don't know, but that's why you do some research. You think. You don't just run out and buy the stock because you like the product. You say, hey, I really like this and I use this product all the time. Maybe I should invest. All right, I hope you thought this video was helpful. If you did, hit the bell, hit the subscribe, hit the notifications. Thanks for watching and have a good day.